we obviously see a market betting on a Chinese reopening right now. China is outperforming other equity markets. We see a bounce back in the price of some commodities, most notably, for example, copper and other base metals, as a consequence of this reopening play in China. But I have my doubts on whether this is just a straightforward conclusion to make. If we look broadly speaking across the commodity complex, I've taken a look at historical data on the Chinese economy relative to all commodity asset classes. And what I find is pretty interesting when I look at a 10-year horizon of data. First of all, if we look at the Chinese PMI, so the Purchasing Manager Index of China, and the correlation to commodity asset classes, we find silver to be the best performing commodity when China rebounds. So precious metals may also be in for a positive ride as a consequence of this reopening trade in China. But otherwise, it is interesting to see that zinc, copper, and aluminum are all placed on the top of the leaderboard on this 10-year chart, while we have gas oil and other energy commodities towards the bottom of this heat map. If we look at the one-year correlation, it is a bit different. And that was some of the feedback that I got last week. Try and look at correlations between various time horizons to double check whether the conclusions hold. And if we look at a one-year correlation, we should actually expect crude oil and gasoline to rise as a consequence of this reopening. So the most recent correlation patterns from 2022 will tell you another story on the Chinese reopening and the effects in commodity space. I still hold the view that it's a safer bet to bet on rising base metals, potentially also precious metals, as a consequence of the Chinese reopening. But if you look at the most recent correlations, energy should perform as well, in contrast to what I said last week. So the Chinese reopening is probably one of the risk scenarios to my negative view on energy presented last week. What I will say in relation to this energy story and the Chinese reopening is the following. Russia now only sells its oil to China and India. Those are the two major clients left. I find it very hard to believe a scenario where the OPEC Plus decides to cut the supply of oil during a Chinese reopening, simply due to the fact that Russia cannot live with a scenario where they decide to, quote unquote, piss off their biggest client in the commodity space. And that is essentially what they will do if they agree on supply cuts in the OPEC Plus cooperation amidst a Chinese reopening. So I consider that a very unlikely scenario to unfold over the course of Q1. And therefore, I consider supply to be ample relative to demand, even in a scenario where the Chinese economy reopens. And that's why I prefer to bet on the Chinese reopening in base metals, such as copper, instead of in energy. If we look at the correlation between industrial base metals relative to the Chinese PMI, we find a very strong correlation over time. And there is typically a time lag between the rebound in the Chinese PMI that one should expect into the spring and the subsequent move in industrial metals. So you may still have time to position for such a move in the commodity space. If we look at the ramifications for equities, I've also here taken a look at 10 years of data on the correlation between the Chinese economic activity and the subsequent performance of various equity indices. The overwhelming story here is that a Chinese rebound is typically positive for equities. So I guess this could be a game changer for the otherwise bearish outlook for equities. But if we look at the regions that are likely to gain the most from such a reopening, Japan is topping the list, but also local Chinese equities and Hong Kong equities are likely to gain from a reopening, also to a larger degree than, for example, the S&P 500 in the US. If we look at US equities, NASDAQ is more sensitive to this Chinese reopening in a positive sense, while also Russell growth stocks tend to outperform, for example, the S&P when the Chinese reopening occurs. So that is something to bear in mind. If you're negative on the equity market, this Chinese reopening could alter that view if we get this grand reopening unfolding through the spring. I have my doubts whether it's enough to fully counter the negative consequences of the recession of the West. But in any case, it may be worth considering going long APAC, quote unquote, equities as a consequence of this Chinese reopening. Japan looks like a decent bet on such a story. Finally, if we look at sectors in equities relative to the performance of the Chinese economy, we have information technology at the top of the leaderboard. We have consumer discretionary right behind that. And then we have healthcare ranked as number 3. And if you remember what I said last week, I prefer to be long healthcare stocks relative to short energy stocks as a relative play on inflation slowing, growth slowing in the US. But it is also interesting that we have a positive move on the cards in healthcare as a consequence of the Chinese reopening on historical data relative to the move in energy. Energy is the worst performing sector of 10 years of data when the Chinese economy rebounds. Obviously, this is a sample taken over the past 10 years where energy didn't perform overall. But in any case, I find it interesting that healthcare is so positively correlated to the Chinese economy and the potential grand reopening during the spring.
We hope you enjoyed the video. At Real Vision, we help you understand the complex world of finance, business, and the global economy with in-depth analysis from real experts. Join the revolution at realvision.com.